Welcome to today's weekly technical analysis as we take a look at the Focus 5 stocks, gold, silver, oil, and a few of the relative ETFs. This is the week looking back at June 10th to 14th for the year 2013. So this is looking at the 3-year weekly chart. As you can see, we closed above the $12,000 mark for the index, but well below the 12.5. Looking at the MACD and the MACD histogram, not some good news. We tried to break through, but again, as you can see, 1, 2, 3, 4 weeks of declining closes has pushed the MACD lower. On the momentum side of things, steep contraction here, and even steeper contraction on stochastics. We are seeing the momentum moving away from the index as people are selling off, either moving into gold and bonds or just into cash. What's important to note is that we didn't close below 12,000 because that would be a major sell signal for the index. But momentum really isn't with this index for now. Looking at the 6-month daily chart, broke through 12.2, which is perfectly fine because the next level is 12, but again closed on Friday around the 12.2 mark, indicating that while there is some weakness, there is belief at this 12.2 line. MACD and histogram, again, not great. We're seeing the divergence continue to weaken, even though the bars stay the same. The divergence is heading lower. Momentum moving away from the stock as our index, and again here, even though it is heading lower, it's coming towards an inflection point, which could again push the index higher as soon as there is a bit of buying. So for the next week, I would expect it to be again volatile, but I personally would expect it to be somewhere closer to a set of days like this, where the index shows a rebound for the week. That is, of course, unless there are some unforeseen news, which again push the index even lower. This is the oil prices 6-month daily chart. As you can see from Kitco, we're hitting the 6-month highs here at $98, and a good sign for energy companies. Hopefully will help increase their profits and push the stocks higher. Looking now towards our Focus 5 stocks, we have Enbridge, 3-year weekly chart, and 2 weeks ago we had the major drop for the week. The last 2 weeks has been fairly stable. MACD showing and histogram showing the impact of that decline. 1, 2, 3, the divergence is steadily growing. But we have momentum here in the blue, another inflection point here, looking to start to cross higher. So that could bode well for the coming weeks. 6-month daily chart came down, stayed around 44, and then turned higher. And what's important to note is that it closed higher than it opened. Looking down at the indicators, we see the MACD histogram. Histogram bars are steadily shrinking, a very important sign. The divergence is shrinking, so the stock is actually converging. Good sign as well. Looking to see a positive crossover here. RSI showing momentum is in the blue. It grew, but it's kind of plateaued a bit. But stochastic is in green. Even though it's not as sharp as the last couple of days, it's still higher. Looking at IMO through the 3-year weekly chart, not a lot of movement. You can see that it's trying to take advantage of the rising oil prices, quite unable to. And you can see convergence and divergence not going anywhere. Momentum is starting to turn away from the stock, and on stochastic it's even more clear than that. If we come back down to the 37.50 mark, that's a distinct possibility. But again, we'll have to wait and see where the stock moves. Looking here at the 6-month daily, it's range bound really between 41 and 39. Seems to hit 39, goes up to 40. Sometimes traditionally breaks through 40, and on rare occasions hits 41 before coming back down. So the last month or so, I would say, it's been between 39 and 41, and that's coincided with the rising oil prices. MACD and the MACD histogram not looking so good. Again, down. So that's a negative aspect of the stock. Momentum here, flat. Still in the low range of things, so there's room for it to maneuver. But stochastic is showing it did cross over, but looks to be heading down. I could see it coming back down to this $39 mark, staying there for a couple of days before starting to turn around. But again, have to wait and see what oil prices does and what happens with its oil sands projects. Suncor, 3-year weekly, very, very range bound, as you can see, 27.50 to 35. Had trouble breaking through the 32.50 mark, but it's starting to come back down. Probably will reach around 30 before turning around again. On the last week, it closed pretty much where it opened, so not a whole lot of movement. Momentum definitely out. You can see that with a steep decline here, as people are probably taking the profits from it breaking above 32.50. We do have positive crossover, but the bars are very, very tiny. The stock, week by week, is closing lower and lower and lower. 6-month daily chart. Again, you can see the range between 31 and 33 for the last couple of weeks. And unfortunately, closed lower than opened. MACD histogram saying go away. RSI saying going away. Stochastic says maybe with the inflection point, but I would bet it would start to turn around since it is coming so close to one of its support levels. But again, be patient. Don't jump in right away. Royal Bank of Canada. There's been a lot of news on the mortgage side of things in Canada. If you want to learn more about the fundamental side, you can subscribe to the RTMA. But just looking at the chart itself, 3-year weekly, looks to be one top, two top, and stuck around 60. Could come back down to 57.50, but I would hesitate to say it's coming back down, even though the MACD and histogram are so weak. The momentum has stopped falling, and that's a key point. You could see some basing in the momentum side of things before it starts to turn around. And again, it closed higher than it opened, but well below, or not well below, but just under the $60 mark there. 6-month daily, you can see a bit more of that decline has stopped, and it did close around that 60 mark, but the momentum seems to have been shifted away, especially after this massive day where it opened under 59 and closed just under 61. So that Thursday was a good day for Royal Bank. MACD histogram bars are shrinking, a good sign. MACD seems to have plateaued and maybe turning higher if these bars continue to shrink. Definitely another good sign. Momentum, however, seems to be slipping away from the stock. It could come back down to the 59 mark, but again, a potential inflection point here, even though the stochastic 14 days above the 3, you have to wait and see. But it looks like it's not the best time to jump into Royal Bank as of yet. TD, again, 3-year weekly, 80 to 84, closed lower than it opened on the week. Negative crossover here on the MACD, and the histogram bars are starting to shrink. It's not a good sign. Momentum definitely leaving the stock here, and even quicker on the stochastic. But what's important to note here is that the negative crossover couldn't quite breach through, touched, and decided to decline. so not a good sign for looking at the longer term. Now, if we're making our way to the 6-month daily chart, as you can see, definitely 80 is the lowest it's been in the last 6 months, and it could reach that down again. But right now, the range seems between 81 and 83, with a potential higher of 84. Unfortunately, on Friday, it closed lower than it opened, as people probably took some profits. And you can see divergence widening, RSI falling, but again, it's still in that very, very low zone, so I wouldn't be too worried about it. What's more discouraging is the inflection point here seems to be going towards the negative side of things. But again, with the whole mortgage issue in Canada, institutions are going to have a tough time growing their earnings from domestic lending. Here is the 6-month chart of gold, down 305 points in the last 6 months, or 18%. Have a small uptick over the last couple of days, nothing to write home about. This is CGL, iShares Gold Bullion Fund. Not a lot of movement, as you can see, 12 to 1250, and you can tell by just very, very small movements throughout the day. Again, you're not looking to make your 1% with ETFs, but more to preserve your capital. Indicators are looking good, however, and that's due to the price of gold increasing. But again, it hasn't broken through much past 13 in the last month or so. So it's still a long way to go for this ETF, but with gold prices starting to rise a little bit, we're seeing some movement. HGU, the Gold Bull Plus ETF. There's not a lot of movement in gold pricing, so this ETF hasn't really moved at all. I put the momentum is leaving from the stock here because it crossed lower, flat again. Nothing too exciting to get going or get your trading juices salivating, but it closed lower on Friday, and really the movement has been minuscule. So again, if you're going to get in, you have to wait until gold prices really start to move higher, and then you'll see this ETF move higher. HGU, the Bear Plus ETF from Horizons. Again, gold prices have been stuck with this downward pressure, so the indicators are saying great, great, and great, especially after jumping from 18 to about 21 something over the last 2 weeks almost. Okay, so with gold prices continuing to be depressed, the US dollar is going to have an impact on it as well. As people start to see the growth in the US economy, they'll start dumping gold and buying US dollars. Falling gold prices are great for the Bear Plus ETF. Price of silver has dropped almost 32% in the last 6 months. And we did see some strong price increasing here. Will it be sustained? I doubt it, but it did break through the $22 mark. SVR, iShares Silver Bullion Fund. Boom, boom, boom. With the rising silver prices, indicators are staying great. Jumped definitely here in the last couple of days, from Thursday to Friday. Nice big jump there, but didn't move at all on Friday. So silver prices again are still quite depressed, just like gold. We're not seeing much movement whatsoever. HUZ again is falling silver prices. Not much movement again, even though the indicators are saying good news. Until the prices really start to move one way or another, you're going to be stuck in a holding pattern. And this is HZU, the Silver Bull Plus ETF. Same thing. Without the prices moving any higher, the ETFs, while may have good indicators, prices are a different story. That's it for us this week. Here's my email, questions, concerns, suggestions. Please let me have it. I would love to hear from you. Check us out at www.traintoinvest.com. looks like commodities are starting to move, especially oil, but gold and silver do remain depressed, and that's going to have an impact throughout the rest of the market. So that's it for us this week. Have a great rest of the week, and we'll talk to you later. Bye now.